Hello, traders. What a week last week. I remember being with you guys last Monday and saying there were so many red events that I might be a spectator rather than a speculator last week. It was a pretty good week to let all the dust settle and everything and now look at what's the result. We had that powerful rally in S&Ps. I talked about if we got back over the 4,200 level, that something different was happening, and here we are trading at 43.67. I think between here and 4,400, we're going to get some type of high and then maybe a pullback towards 2.5 or so. The big news was also what happened in the dollar. I'll start off with US dollar yen, and we have this double top working on the weekly from last October right here, and we almost took it out. Not quite, not much follow through this week, but I think it's important. And the implications are something else that I brought up on these videos was TLT. I said if we had a break to new lows, I'd add on. We had a very nice reversal week. We're going to pull back today, but this action is pretty constructive. Maybe we'll get some type of head and shoulders with the yen pulling back. I don't think the yen is going to take out that double top. I said to be patient in the metals. You know, when I look at what happened compared to the huge move in equities, and then over the weekend, I take a look at what performed and what didn't perform. And last week, with a weaker dollar, with lower yields, gold did not make much headway. Silver did, but it took the NFP on Friday. But gold basically put in this candle. Not basically, it did. And we're starting off lower here. I still think that this could be a possible top and that it is right to be patient, to wait for better levels to buy. Silver's acting better. Gold silver ratio had a pretty negative day last week, but it's not, I wouldn't say broken yet. So silver only down 4 cents, but you can't rule out maybe one more push to clean out stops over these highs, but I'm still looking for lower levels in silver. And with what's happening in yen right here, I'm looking for areas to be a seller in the next few days. You know, we did have a confirmed high. This was a very difficult top to pick. Remember last week I said I'm bearish yen going into the BOJ. I did not expect this type of explosion. They cleaned out every short, so maybe look for fib retracements back around 150.80 or so. Maybe some type of right shoulder could develop here in yen. Um, Again, what really performed? I wasn't that impressed, even though the dollar was weaker with the action in euro. I mean, comparatively, here's a daily in euro compared to, say, the daily and the action we had in S&Ps, and it's night and day, right? So I still think the euro has the potential. Some people are talking 109. I think it's got a barrier a little sooner up here around the 108 level. Some people are talking 109 at 61.8 back. If we fail from 108 and then take out the lows of 105, it gives us the long-term target I was looking for 102 in the euro. Um, so if the dollar holds 104, 104.50, this could still be viewed as a correction before one more thrust to end it. So top is developing, but this could still be a wave 4, and we get one more push up towards 109, and that'll be, I believe, a very long-term selling opportunity in the dollar, buying opportunity in things like euro. Aussie, a lot of people are saying we have a breakout, but I have this wedge all the way up there at 6.5. And if we do get some risk off here in Aussie, I think there's a chance for us to have one more shot down towards the low 62s. And that also will be a long-term buyer I'll be a long-term buyer. I thought I'd get it last week, but then we had, the NFP and also the Fed, where people are saying the Fed is over, the Fed is done tightening, and now they're looking for uh, weakness. So here's the 10-year, and it's very possible that this was a top. I was talking about TLT putting in a bottom. Here's your 10-year, and I think a very logical place for the 10-year to come back to would be the prior high that we had in October of last year, which is around the 433 level. Shorter term, just like the yen, it's up today, but perhaps we get some type of right shoulder up here in the 480 range. And then once we take out this level as 450, maybe we're talking about 420, 4% on the 10-year in the weeks ahead. So I'm going to go with selling rallies there, buying breaks in bonds. And something to consider, a trader friend of mine, Peter Campbell, who's going to be with us along with Chris Carolyn on Wednesday at, it's going to be, what is it? It's going to be 8 o'clock our time. So 11 a.m., I believe, EST on Wednesday. Just check it out because you guys have to hear both of these guys together. Let's see, I have it. Yeah, 10 a.m. Pacific time, which is 1 p.m. Eastern. Be there for that interview. And Peter was saying that, if they start to embrace a bond rally, and this is how it could happen, a lot of people love getting this 5% for in money markets and whatever else they're buying, maybe short-term T-bills. But if rates start to slip towards 4, what you're going to see is people not being happy that they didn't lock in those rates. Because if they're in a floating rate, even government treasury fund or T-bills, as rates come down, so will their payout go down. And if they decide to embrace bonds, that could really create a liquidity problem in equities as people who, I mean, really look at the TLT. It's been one of the most vicious bear markets in history. Let's look at the weekly and you'll see what I'm talking about, or even the monthly. Let's really get macro. So TLT was 170, okay? And here we are down at 80. So if we really get going here, and there's an allocation because, Apple's earnings weren't great. There have been some earnings that have been very good, like Amazon's. But if we have, some more numbers like the NFP that wasn't a hot number and things start slowing, you're going to get people wanting to lock in rates, buy bonds, and to buy bonds, they may shift from being 70-30 stocks bonds to maybe 60-40. And I'm not even sure people are still at 30% after this vicious bear market, which is, created if you're long bonds from up here, even if you're holding them for maturity, at least 50% loss on principal right now. So we could get a very sharp recovery in the bond market. Maybe, initially it's going to be the prior low that's giving it some trouble, but why not 110 again? Why not 120? And that's going to, if the bond market sucks liquidity out of the stock market, that could be a problem. And it could be a problem for banks. Another bank failed over the weekend quietly, forgot the name of it, I think Citizens Bank. And when I was talking about, I wanted to see what things were doing as far as how they performed. Here's a look at, say, the regional bank index, which is open now. There's your monthly, but your daily, we kind of have a low gap above it, gapped up, possible just short squeeze. And if banking problems continue, there was even a major glitch about receiving deposits in the U.S. banking system with some of the major banks this weekend. just was kind of a reminder to me about how fragile it could be. They're saying it was human error, but important that you find safe banks to keep your deposits at. So I think I wanted to cover energy because that also would be part of the equation to, generate a bond rally. So we're at real important support here in WTI, and we start taking out the 80 level. You're talking about $70 crude or so. And one of the weaker groups last week, and we're open, and people own this one because it's been, last year it was a star, and not bad this year either. The XLE is the energy ETF, and we've made 2 trips down to 84, important support, unable to make a new high on this last rally into the breakout of hostilities in the Middle East. And the more a market tests a major area, the weaker it becomes. So here we are, actually hardly higher on the day with crude up $1. And should we take out this 84 level in energy, just like if the crude takes out 80, we could be looking at the June lows because a measured move is about 9 from here, which is going to take it towards 75, 76. So be careful with your energy holdings. And that would fit in with a little deflationary impulse trade where there's some liquidation and rates come down and people begin to flock to the bond market. It's still a very contrarian trade to talk about being long bonds. And we'll see what happens with the dollar. Watch at 108 level in euro, and looking for a failing rally in US dollar yen. And I'm not willing to declare that the dollar has topped unless we start closing under this level, the weekly 50-week moving average, which comes in right around 103.5. Under 103.5, that's problems. Then we're talking about, something like this from here, which could give you 90 on the Dixie and a 120, 130 euro. So the next couple of weeks between 108, 109 in euro is very important. And we'll see if this was just a correction in everything that happened last week, including a short squeeze in equities. So I'll see you in the room, and I'll be here with Mike tomorrow. I hope that we're adding value to what you're trying to accomplish as a trader. Remember, don't just count your pips, count your blessings. And I'll see you, and make sure you're around for the interview with Peter Campbell of MCM USA and Chris Carolyn of the Spiral Calendar. And I'll see you guys later. See you in the room. Adios.